Okay, everybody, it's me, Gregory Mannarino. It is Sunday, April 18th, 2021, and this is my newest segment of Markets A Look Ahead. Let me set the stage for you real quick. So I wake up this morning and I, go over to my computer. I open my email box and my eyeballs explode, literally. And I'm like, what's going on? It appears that cryptocurrencies, Bitcoin, are taking a big hit right now. And a lot of you are concerned about that. Well, rightly so. Sure, absolutely. When this stuff happens, we got to pay attention to it. But what is happening? What's driving the price of cryptocurrencies right now lower? Well, it's two things. It's the same story for the most part. But let's cover it. So we understand that we've been hearing talk about regulation with regard to cryptocurrencies. And of course, the market doesn't like to hear that. That put pressure on cryptocurrencies. Well, this round right now is because the U.S. Treasury is making another threat like they've done many, many times. They are threatening to crack down on cryptocurrencies because they're being used for criminal activity. I mean, that deserves a big fat duh. Why am I saying duh? Because the US dollar remains the number one currency on the planet that is used for criminal activity. You can't make it up. Again, this is the twisted environment that we are in. So that statement from the U.S. Treasury, we've heard this before too. We've heard it over and over. Cryptocurrencies take a hit. Nothing happens. Institutions get in here and they start buying it and it goes back up. You know what I say? I say good. Good. What do we know? We understand that the banks, the major financial institutions are rigging the market with regard to precious metals off the Richter scale. Not just precious metals. I mean, they're rigging everything. The LIBOR rate, you name it. It's getting rigged. Now, with regard to the price action here of cryptocurrencies, of course, we know institutions are buying this stuff and they're going to continue to buy it. So in my opinion, institutions are going to get in here and buy the dip because they've heard it too. We've all heard it. The threats of regulation, the threat of cracking down on cryptocurrencies because they're being used for criminal activity. People, you can't make this stuff up. It's an impossibility. But this is what they shove down our throat over and over again. And to me, I'm going to just say it again, and I don't give a damn if you say I'm wrong. Some of you say how wrong I am. It's a buying opportunity. It's always been a buying opportunity. Every single time we've seen a dip with regard to cryptocurrencies, they go right back up and then higher. Look, until we really do see some kind of regulation with regard to cryptocurrencies, until we actually see the Treasury crack down on cryptocurrencies because they're being used for criminal activity, like the dollar isn't, hello, duh. Until that time, these are buying opportunities in my view because, again, let's just rely on the past, people, over and over and over. Hundreds upon hundreds of times we've heard the same stories, both of them. Regulation and cracking down doesn't happen. So there we go. It could not be more simple in my view. So I don't care. Again, look, here's the other deal. Let me explain this to you real quick. Do not trade cryptocurrencies. I buy and hold cryptocurrency. So I don't care at all about this kind of movement. You see, there are guys and girls out here who trade this stuff. I trade the stock market. More specifically, I trade equity derivatives. So that makes a difference to me. But with regard to the price action of gold and silver, which have no bearing on reality because the hard asset derives value from the derivative in this upside down market. Okay, and we got the in-our-face rigging of the metals market. Okay, whatever. I don't care. I don't care because these are long-term holds for me. With regard to cryptocurrencies, same thing. I am not trading these things. These are long-term holds for me. So good. I'm going to buy the dips just like I've been doing since time immemorial. And that's it. That's it. It couldn't be more simple for those of us out here that are not trading them, getting in and out, blah, 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 blah. No. Look, I don't have time for that. I hold this stuff, and I'm sure most of you do too. So when you see a dip like this on the back of, threats of regulation, threats of cracking down, you probably laugh. You probably laugh just like I do. Serious, I really do. Because every single time, without exception so far, every time without exception, without one exception, every time this has happened, it goes higher. So sit back, my friends, and just laugh. Now let's talk about this market, the stock market, real quick. In my opinion, it's going higher. The market is going higher this week, as a matter of fact. I told you last Sunday, the market was going to hit record highs for the next 2 weeks, including this week. Last week, record high, record high, record high, record high. This week, we're going to see the same thing, and I'm going to tell you why, more specifically. We're going to get earnings this week. A lot of big corporations are going to report earnings, and I believe earnings are going to come in, are you ready for this? Better than expected. Better. And they're going to keep pushing the narrative of an economic recovery. We are not in an economic recovery. We're in an economic free fall, and we can prove that because this week we're going to get a whole bunch of economic reports. And I guarantee you, every one of them is going to be negative. But the mainstream is going to play it up like this. It could have been worse. That's what they always do. That's what they always do. And remember, the worse the economic news is, the higher the stock market is going to go. The moment we get real good news on the economy, that's when the market is going to take a hit. Until that time, the market is going to keep going higher with the Federal Reserve promising to support the economy. No, they're going to support the market. Okay, they're buying it all. They're artificially suppressing rates from here until oblivion, whenever that may be. It's just not going to stop. The dollar, again, its purchasing power is at an all-time record low. And do you think we're done? No. So let's put that into perspective. If the dollar's purchasing power continues to dive, what does that mean for the stock market? Well, it's going to be priced higher in weaker dollars. You understand? It's very, very simple. The 10-year yield, as we've all been keeping our eyes on for the longest time, is stable, and it's actually come down lately. So we got this weak dollar, and it's getting weaker. We got the issue here of the 10-year yield, a Federal Reserve buying it all. Look, the Fed today is literally the lender and buyer of last resort. They have fulfilled their goal. The Fed's goal since their creation in 1913 was to one day become the lender and buyer of last resort. This is what they have worked towards. They've used the scamdemic to make it happen. Look, this is the golden age for central banks. They have achieved their goal, their end game, to buy it all, to own it all. They're there right freaking now. And you can see the effect of this in the stock market. Okay, but that does not mean that lurking here in the background is not a monumental stock market crash. Like you cannot believe. Again, their final solution, okay, is going to be to wipe out the stock market. Why? To create the wealth transfer effect from those people, all those paper millionaires out here, all those people looking at their 401k plan. Are you ready? I'm rich. I'm wealthy. You got nothing. Nothing. Okay, until it's realized. And that cash in your 401k is going to be legally transferred from your lovely account right up to the one percenters, okay? Because they know how to take advantage of this. The investment banks are going to bet against their own clients, just like they did. Goldman Sachs did this. They paid a $6 billion fine, million, whatever it was. A nonsensical fine for betting against their clients. Do you realize that Goldman Sachs, the super bank of Wall Street, one of them, bet against their own clients during the meltdown and nothing happened to them? They paid a fine. Bad boy. Bad boy. That's what they do. You can't make this stuff up either, but that's the way it is in the twisted environment we're in. So in summary here, real quick, expect stock market to hit record highs this week. With regard to cryptocurrencies, laugh. People laugh. Because the threat of regulation and the threat of cracking down, and it keeps cracking down on it. Hundreds of times we've heard this. And every single time the market reacts this same way, goes down, the market with regard to cryptocurrencies. And then guess what? It goes right back up again. I'll be okay. I'm going to be okay. All right, people, look, I love all of you, and I mean that from the heart. And I just want to say this real quick, a couple of things. I see so many new people utilizing the chat room on my website. Again, I pay for that. All right, that chat room is not, it's free for you, not free for me. I pay to have that chat room there. I opened up hundreds of spots, and there's still some open. So go to my website, traderschoice.net, get your spot right there. It's free. And enjoy it. And, you know, there's a lot of people out there that are into cryptocurrencies, and they'll be able to talk to you as well. Again, like I said this morning, I mean, like my eyeballs exploded. Oh my God, Greg. Oh my God. I'm just sitting here going, okay, whatever. You know, but you know what's going on here. You know why you're seeing this. And I think that's more important. And more importantly than that, you know how to capitalize on it, because it's the same dog shit stories plural, that we've seen over and over again. The same reaction that we've seen over and over again. Do you think this time's going to be different? Really? I don't. All right. I'm really going to let you go. See you in the morning. I'm out of here.